Welcome back to Investing with Mackie. In this video, we're going to continue that deep dive we took in the last video, looking at our put-call ratios and see if there is any information we can glean from that to assist in opening positions. And bottom line up front, after a little further analysis in the data alone, I couldn't find anything. We'll look at the correlations here in a minute, but ultimately this by itself doesn't seem like it would be something you'd want to use as a indicator for potential trades. Now, if you threw it in as one feature as part of maybe machine learning or something like that, maybe there could be some random connections that would give it some more weight. But ultimately, as we see in the data here, it doesn't look like it's a go-to indicator I thought it might be. So dive into the first chart right here. This is kind of the information we ended off with last time. So we've got on the top, this is the call open interest. Then we have our put open interest. Then we have the ratio. So basically dividing our puts by our calls. And then we compare that to our price. So we can see the price correlation is pretty good, but we're not concerned about the actual correlation to the price because we can see the price movement. What we're really interested in is in its predictive capabilities, right? So we went ahead and looked at future prices and then looked at some correlations. So we can see for our open interest put call ratio at 60 days, we had a negative correlation of 0.38, which is not bad, but it's not great either. It's not something that you would want to necessarily determine what you're going to invest based on that single value. So then we have pulled aside our open interest put call ratios for in the money versus out of the money. And we can see those values here. So not really great correlation. As a matter of fact, if we come down here, we can look at this and I've got a chart to show that. So we can see here, if I get that centered up nicely, this top chart here is our in the money put call ratios. So we can see, right, it looks kind of really funny. So in the money, you can imagine that you're not going to put a lot of investments into in the money options, at least speculatively, right? Because they cost a lot of money and you can lose a lot of money. So that kind of makes sense. Maybe there's not as much fluctuation in there. It kind of levels out. Whereas the out of the money, we definitely see a lot more fluctuation, and it looks like it actually parallels with the price action a little bit better. But once again, we're not concerned about how well it correlates or parallels to the price. We want to know its predictive capability. So if we look back at that ratio, we can see here the correlation. Neither of them did very well, right? So in the money versus out of the money, 0.18 versus 0.1, that's not very good at all. It does look like the in is better than the out though. So surprisingly, this has more correlation in predictive pricing than the out of the money correlation, which to me was surprising because I would picture that speculatively you'd be buying out of the money calls, hoping the price would go up and you can make more money on those potentially, right? So with that being said, we went ahead and started breaking them out by days, right? So actually we can see in this chart here, I did this for all of them. So if we look at our put call ratio for 1 to 7 days, we can see for 1 day predictive, 7, 15, 30, and 45, right? It goes up to about 0.17 for options expiring 8 to 15 days, right? Kind of steps up to 0.15. And then our put call ratio for 16 to 30, right, 0.22, and then down to 0.33. So when you look at this, it seems like looking at it from a whole view is much better than breaking it down by individual days because we get that 0.38 correlation as opposed to a 0.33 down here. So now let's look at the in the money versus the out of the money. So starting off, we'll take a look at our in the money, because that tended to have a little bit of correlation. So pull up our first chart here for in the money, and we can see this is our open interest for in the money. Here's our open interest puts for in the money here's that ratio we saw, right, where it flattens out, and then there's that pricing structure. So we'll dive into the correlation, and we can see our 1 to 7, not really good. Looking at the short-term expirations, right, from 1 up to 60, pretty poor. 8 to 15, that's still pretty poor. 16 to 30, not so great. 1 to 60. And then we start to get a little bit of improvement when you start looking at that 30 plus days, right? So the long term correlates with, better, closer to the 60-day percent changes. So we're actually able to beat, if we get in the money, right? We're getting 0.27 and 0.23. We're beating the entire data set for in the money, but still, those aren't great correlations. Last thing we'll do is we'll look at the out of the money. So scroll down here, we can see these are the out of money open interests for calls, for puts. Here's that ratio, right? Good correlation with price action. However, once again, we're not looking for correlation to price action. We're looking for correlation to future prices. And we look at the correlation table here. We can see 1 to 7 days, pretty poor predictor. Grabbing those options for 8 to 15 days, pretty poor. 16 to 30, 1 day out to 60, pretty poor. And then 60 and greater, still pretty poor across the board. So kind of takeaways mentioned at the beginning, it doesn't look like it is a good indicator, but something to consider. Maybe you can throw it into another algorithm, give it a partial weight, right? It's not something to 100% rely on, but maybe this mixed with Fed interest rates as well as moving averages or some other technical analysis might help to come up with a decent strategy. So it's something we'll consider moving forward, but I think this for now is closed, not something that we would want to use on its own, at least in my opinion. My data set is not huge either, right? We're looking about 2 years worth of data. So maybe a larger data set might open that up and give us some more information. But as we stand here, not something I would probably use too much moving forward. If you're interested in the charts, comment below. I'll throw up some links for those. Otherwise, you can see the correlation, the charts in the video. I don't think there's too much information to dive in for those, but if you are interested, I will host those charts so you have access to them if you are interested in diving in. If you like the video, go ahead and give me a like, subscribe for future content, and look forward to presenting some new information for you guys in the future.